many people might not be aware of this, but like basically when you trade on a broker app, so whether it's like Robinhood or Charles Schwab or whatever it is, eToro, what happens is to you the trade kind of feels like it's instantaneous, but the broker doesn't actually have the shares in most cases, doesn't have actually have the shares until the end of the following.
Hey, I'm Shane. I'm a research partner at Hack VC, and I'm joined today by Gabe, who is founder of Dinari.
Hello.
So, Gabe, can you tell us a little bit about yourself and how you got involved?
I founded a company called Dinari in 2021. Really, the goal of the company was to create an infrastructure that would allow for all sorts of different assets to get traded. Because for us, really, this idea of um, the idea that each asset class has its own trading rails, settlement rails, and things like that, which is basically the condition it is today, right? Because we have the banking rails, of which there are several underneath that, and then you have the stock trading and settlement rails, which is sort of the public infrastructure with the DTCC and all that. And then you have other assets like private company shares, which don't really have rails at all. You have bonds, you have debt, you have all sorts of different instruments, and they're not really interoperable in any way, shape, or form. So the hope of Denari was to use the blockchain to create essentially an omni-asset settlement layer. And we decided to start with public stocks because it's the most regulated and the most sort of, shall we say, technically and logistically challenging to bring on chain. So uh, while we're doing public shares mostly today, the hope is that we will be able to work with partners to bring all sorts of different assets in the future.
Hmm. Awesome. So Omni Asset Settlement Layer. What do you mean by that?
So the idea here, so in traditional markets, you have different rails for different asset classes, right? You have the banking has a variety of different rails. You have Swift.
Yeah, what do you mean by rail? So just like a convenient way to basically transfer and
Yeah,
trade
it's it's
assets.
it's it's a it's a way to transfer things. It's a way to settle trades of various different assets,
Hmm.
effectively, right? So traditional banking has, these types of rails. Um, for public stocks, you effectively have you have the exchanges. So this would be like Nasdaq and NYSE, and you have brokers that connect with them. You have DTCC that keeps track of all the trades there. You have clearinghouses that are kind of sitting behind everything, and all of these have some kind of technical plumbing to connect each of them, and they were all created sort of piecemeal over many years, and so it's very technically brittle in some ways, and so we've had essentially the entire system crash some several times actually in the last decade or so,
Hmm.
where essentially the market stopped working. So um,
There's also T+2, right? Or something, which is turned to T
yeah, I
plus
mean
one.
they're getting it down to T+1, and we can sort of talk about why that is, but essentially the old infrastructure in terms of like Swift and Wire and ACH, right? Like when you start doing So vertically is one thing, right? So exchanges, brokers, DTCC clearinghouse connecting and communicating is complicated enough. Um, but then when you start trying to connect uh, different classes like stocks with banking, you're now having to, piecemeal things like ACH and wire to various clearinghouses and depositories, and then try to sort of move money around that way. And then it gets sort of further complicated. For example, if you're trying to, um, say, trade public stocks with private stocks, or crypto, anything like that gets much more complicated. There aren't really good rails for it. We're trying to sort of solve all of that today. Basically, the model has become you have kind of banking in the middle, and then you have kind of everything else in the periphery, um, that you can trade. So this is fairly inefficient a way of doing things. So the idea is if you can kind of on-chain all these different assets, which is what we broadly call tokenization, then the blockchain essentially replaces all this infrastructure, all the different rails, Swift, the wires, the plumbing behind exchanges, brokers, DTCC, all these connections.
Mhm.
Um, you basically can replace all of that with the blockchain system. So that's obviously the vision for where we're headed. Now, public stocks, or let's then talk about public stocks in particular, because it's actually fairly complicated in terms of how this works. Because you first have essentially an order book where you're matching buys and sells.
On one of the, 16 US equity exchanges or something.
Well, I mean, yeah, and ATSs, and this
Yeah.
can basically happen at any time. And so once the buys and sells match, you get into, trade execution, and then what happens is both sides confirm the trade details. So this is called confirmation and allocation. So this is mostly instantaneous because this happens at the exchange level in terms of the trade execution. This is same day. So it takes a day for us to confirm and allocate. And then you go into clearing.
And you'd hope there's some netting at some point. When does that happen?
That happens after clearing.
Okay.
So the clearinghouse then becomes kind of the central counterparty that's guaranteeing the trade, right?
Mhm.
So this part is, probably T plus one here is kind of the one of the longest parts here. And then, as you mentioned, we go into netting, and this is where the clearing firm nets all trades across all participants, to reduce the number of securities and cash actually exchanged. So it's like,
Yep.
because the plumbing is kind of antiquated, like we really need to have a central party that's kind of figuring out, okay, what is the minimum number of things we have to move around to make sure that everyone is happy and everyone gets what they want to get. So this is also about T plus one.
And then there's shorting and delivery and all that stuff, and that all happens in the clearinghouse.
So then it's settlement after that. So settlement is after the planning actually happens on the netting side, you have the final exchange of securities, and this is where DTCC sort of comes into play, which is kind of the central ledger of all the different exchanges that plug into it. So like we literally have one company that's responsible for keeping track of who owns what securities at the end of the day. And then the cash here is delivered by Fedwire, right?
Mhm.
And the buyers get the shares, the sellers get paid. And this happens also at kind of a T plus one at this point, I think. And generally this happens at the end of the day, which is about 4 p.m. Eastern. So that's
T
how
plus one just meaning basically a day after the trade was
a
made.
day after a day after the trade happens. So, many people might not be aware of this, but like basically when you trade on a broker app, so whether it's like Robinhood or Charles Schwab or whatever it is, eToro, what happens is to you the trade kind of feels like it's instantaneous, but the broker doesn't actually have the shares in most cases, doesn't have actually have the shares until the end of the following day.
Mhm.
That settlement of everyone gets what they need, really just the book close, if you will, happens on a T plus one basis. And then finally, after the settlement is done, the local books, so this would be where the brokers with the order book are coming back in, and you have the custody and the record keeping update. So when you look at all of this stuff, there's basically different companies involved in different steps of this. You have the clearinghouses, you have the custodian banks, you have the retail brokers,
Is
sort of all involved in trying to get this through, and that's not including stuff that you mentioned in sort of short sale handling or failures to deliver, and a bunch of
Mhm.
other complexities that can go into it. So and just to be very clear, this is just for one asset class, which is public stocks
In the US.
in the US, right? And so I'm not even talking about, reporting or anything like that. I'm literally just talking about the plumbing of it all, and how this works. So it's fairly complicated. There's fees sort of assessed, kind of all along the way here, every step. And somebody might say, well, I don't actually pay for that, because Robinhood trading is free or whatever. That's actually not true, because you pay it one way or the other, because Robinhood has relationships with the clearinghouses, and maybe they're taking your shares and hypothecating them. Hypothecating meaning they're lending out those shares to others who will let them earn interest, which causes all sorts of problems if there's like a large default or something along those lines. But you can also have situations where ultimately you do end up paying, because all of a sudden they're charging you kind of a monthly fee to do like all sorts of trades, things like the companies have to make the money up in some way, shape, or form. The free trade is kind of a way to get people hooked, obviously, onto the trading. And then there's like options and other types of things that they will charge you for more significantly. So the bill comes due in one form or another, ultimately. So the idea is like, how can you do this better? What's a better way of doing this? And that's what Dinari has been building with our L1. So we have a chain that's actually a centralized order book. And the reason why it needs to be centralized is because, at the end of the day, securities are still regulated. You do have to have certain reporting rules and, things along those lines that you have to follow. However, the L1 at its core, it is a blockchain, which means that certain things can happen now much faster than they did before. So here's how we essentially structure it. So if you have the on-chain L1, that's kind of the order book. You have essentially the user here coming in with their wallet, and they can essentially place an order to the order book. And this can be market or limit order. And the order book is essentially connected to other users, of course. So people are either putting in buys or sells, and the order book is able to match these orders. Now, the clever, I think, system that Dinari has essentially created is if an order comes in and there is essentially no liquidity, it can so like no on-chain liquidity, right? So no on-chain. The order doesn't just fail. It actually routes to a traditional clearinghouse.
So my centralized order book, that's for what asset?
So this is on-chain
Just any
matching
asset.
of tokenized stocks. But
Okay.
again, this can essentially, because it's a blockchain-based infrastructure, it can essentially work with any kind of tokenized asset of any kind, right? So the order book can essentially match buys and sells across all sorts of different asset classes. I'm just using it for public stocks and how we handle it today as Denari, because as we talked about, it's fairly complicated with public stocks. But so if there's no on-chain public stock liquidity, it routes to a clearinghouse. The clearinghouse then goes and acquires those shares. So let's say the order is wanting to do buy share. We go and buy those shares in the traditional markets. So this would be the FINRA, which is the SEC body regulating the broker-dealer. And you have the market center um, that does all those steps that we just talked about in terms of the clearing and the settlement and all that. So we go and buy those shares, and once we receive into the clearinghouse the execution report that proves that this was actually um, a trade that has gone through. And just to be very clear, coming back to this is the execution report, right, which happens fairly instantaneously. So this comes back. Then we essentially go back to our L1 and tell that the execution report has been done. Based on that execution report, it goes back to the user wallet and say mint the stock token.
So take the cash, mint the stock token, basically.
Yeah, well, so the order book is either taking in cash or or stock, right? So depending on which side it's in, it's on buy or sell. But as soon as the execution report comes back, which is fairly instantaneous, then we mint the stock token, and the stock token ends up in the user's wallet. This is where things are, because we're still dealing with sort of the traditional infrastructure in an event where there's no on-chain liquidity. This stock is locked and has transfer restrictions until we get a secondary report back that says the settlement is done, right? Which again is the T+1 thing that we're talking about. But this effectively, this system allows us to mint tokenized stocks to people's wallets and user accounts without having to ever worry about liquidity issues on our order book. So this is kind of the fallback plan, if you will. So this is kind of the worst case scenario in terms of executing on Dinari's system. And so it what happens when there's actually liquidity
Actually,
on
can we
chain.
go back a second real quick? What
Yep.
price do you get on the buy share?
So everything everything in this case is MBBO, right? So this is sort of the best price that you can get in the traditional stock exchanges.
And what happens if they're closed?
So let's talk a little bit about what happens when it's closed, because the on-chain the on-chain L1 is it is going to sort of match, the sort of orders on chain. So you have the order book. And there's a reason why I'm mirroring this. So you have order book here, and one is selling. So one user one, is sending a sell order to the order book. And then you have user 2 here, that's sending to the order book a buy order. So this is buy, that's a sell. And in generally an ideal situation, what happens then is the interests of these both get forwarded onto the actual sort of on-chain L1 system to match the sells and the buys, right? So this is the sell interest, this is the buy interest, and then we're matching the details. And in an ideal scenario, when everything matches, we return in stablecoin to user 1. And then user 2 that's buying, we mint the stock token. So this is what happens like 90% of the time, is a relatively quick sort of execution that happens. The sells and the buys get matched up in the on-chain order book, and the stable coin and the stock token gets minted all in a fraction of a second. And this works whether it's during market hours or outside of market hours. The matching happens. Now, because, again, this is highly regulated, we do then have to send the execution details to the clearinghouses and DTCC. But this can happen, on a T+1 basis while this trade still happens, while the rest of it still happens instantaneously. But again, because we're essentially matching orders and we have millions of users now, that from across the different app partners and things like that, we're able to match those orders fairly successfully. The fallback that I just outlined with sort of the traditional order book and the traditional clearinghouses and things along those lines basically only happens if there's an order that fails to match. Generally speaking, if it's after hours, it might take a few minutes or something like that, but eventually somebody comes that is able to fill those orders, right? And that, depending on what you're trying to sell, depending on the general volume of that ticker and things along those lines, you may not get MBBO. You may not get the best sort of price that you would in the compared to sort of the traditional exchanges. So there is a little bit of a divergence of price if it's like after market hours. But your order will be filled in a way that traditional markets wouldn't do. So in general, this is kind of the execution steps. But you can see here the sells and the buy orders coming in. It's kind of a much simpler step, right? The execution details and things like that we all handle behind the scenes. That's the very complicated system that we outlined in the first page. That still happens, but that is completely on Dinari to essentially solve that problem for users until hopefully one day we don't have to, do that kind of convoluted reporting and things along those lines. But today, what we have effectively built is a way for people to feel the magic of, exchanging the securities on chain without having to deal with the traditional plumbing, which is all the work that we have done. So, I mean, these are terminologies that won't make any sense. FINRA, TRF, CNS, fixed confirmation, like, all those kinds of things that no one ever wants to, sort of think about. Those kinds of things are all handled. I will just say here, user one and user two can also come from two different chains. So our on-chain L1, the reason why I wrote order book in two places here is this could be chain A and this could be chain B. And it would work totally fine because
How does that work?
the on-chain L1 essentially has a built-in bridge layer.
Okay, so it can acknowledge the receipt of an order from another chain, basically.
Basically, the way it works is the order book has essentially order book owned, so it's order book owned wallets in each chain, right? And so when somebody's interacting with a contract on a given chain, the contract is interfacing with that wallet, and basically the settlement of it happens to that wallet on that chain, and the L1 essentially virtualizes liquidity on all the different chains to match the orders. So this way, as new chains come online, which we're working with several right now to bring them onto the system, uh, the liquidity doesn't actually get more fragmented. It actually adds to, from the perspective of the order book, which is actually better for everyone.
Hmm. Yeah, so do you want to talk a bit about the tokenization and how that works and like redemption, creation, etc.?
Yeah, I mean, so that's fairly straightforward. We have the contract here. We have wallet here. And then let's say we have the clearinghouse here. So then what happens is the order comes in. Let's say this is a buy order. A buy order means, stablecoin is coming into the contract. The stablecoin is held there in contract. Let's say this is for $1 of Apple. So you've just sent me USDC, USDT, whatever it is. That gets locked up. Now, as soon as that happens, a message automatically gets sent to the clearinghouse saying acquire $1 worth of Apple. And this is where Dinari is working directly with the clearinghouse. And at that point, we will send $1 in fiat to the clearinghouse in addition to the acquire message. Then the clearinghouse goes into the market and acquires $1 worth of Apple. Now, this is, again, it's just the execution message, right, in this case. So it happens fairly quickly. And the execution message then forwards to the contract. The contract then knows to mint Apple D, which is sort of the tokenized version of Apple. And the contract clears out, and the stablecoin gets forwarded to Dinari. So it's
It
dollar.
can basically pay you back for having
Yeah.
fronted the dollar.
And then Dinari rebalances, right, the USDC with the fiat effectively.
Mhm.
So this way, in this buy scenario, you don't as the user, you don't lose anything until you actually have the Apple D in hand, which is programmatically enforced that it has to be backed by $1 worth of Apple. So at any point, this USDC that's locked up in the contract can be canceled. The user can cancel the order if the clearinghouse hasn't actually acquired the shares and the contract closed out.
So there's no possibility of race condition.
Right. There's no risk to the end user from that perspective. No chance of losing the USDC, nothing like that. And again, this is all very programmatically enforced here. And then the sell is kind of the exact sort of inverse of that, right? So if you come with a sell, you come with Apple D. The Apple D gets locked up in contract, and then a message gets sent, sell Apple. The clearinghouse sells the Apple, returns $1 in fiat. The dollar gets forwarded to um, Dinari ultimately, but the message gets sent, and the USDC or whatever stable coin gets sent to the wallet, and simultaneously the Apple D gets burned. And then again, this is where Dinari gets the Apple D, we burn it, and we're receiving from the clearinghouse the dollar worth of fiat, so that the stablecoin that we're forwarding to the end user, we can sort of rebalance the books. So again, here you can cancel the order and keep the Apple D for as long as the order hasn't executed. So there's kind of no loss to you. And as soon as the Apple sells, we take the Apple D, we burn, and we forward the stable coin. So again, no risk to the end user here.
So I feel like a big uh, important part of how stock exchanges work is like securities lending and the ability to basically short things that you don't own to allow people to market make and trade overnight and stuff like that. Do you guys support that? And in terms of like, how do you also support market makers that are trying to, you know, add liquidity to your platform?
Yeah, so right now we don't support that. We've been live for about a year. So we're mostly supporting, long traders at the moment. That said, everything that you're mentioning, we are planning on supporting later this year, and that includes tokenized options.
Hmm.
So leveraged trading, which I know is very important to short sellers. Lending, borrowing, I hope to be able to announce fairly soon with a couple of partners to be able to do like atomic lending and borrowing, which is like very exciting for us. Obviously, so like anyone can bring, a few shares of Apple D and borrow against that. Like that would be the kind of a dream scenario for owning these types of securities and being able to do like micro loans and things along those lines. So, we're definitely interested in launching that as well. So, some of these features that you're talking about is forthcoming.
Hmm.
I think the most important thing right now is making sure that this system works, that it's compliant, all those kinds of things, which has been non-trivial. We've been at this for about 3 years in terms of building that infrastructure. Um, but now, we're getting to a place where the system is working pretty well. We have not lost customer funds in, over a year of operating now, which is pretty good. And as we sort of add these features on top now, our TVL is close to 60 million now. Um, our volumes sort of are on a monthly basis now routinely cross, $1 million and things like that. So like we finally have volumes that are starting to tick up more, which allows us to have some of these other things like the options and things like that. So we're pretty excited to bring that to the market.
Nice. And then so can I'm assuming because of regulatory reasons, people can't transfer these shares or these tokens out and trade them on like Uniswap or something, right? Because you need to generate execution reports like every single time an asset is exchanged.
No, so just keep in mind what I'm describing here is the primary mint and burn, which always reaches back to the market. But if you look at how the L1 system works, right, it's matching sells and buys on chain. And technically, people can do that with other order books, if it's like Uniswap or something along those lines. Unfortunately, because we then don't know who owns those shares and things like that, you won't get voting rights and you won't get dividends on those tokens
Mm,
until you KYC, and all this stuff. And that's again for regulatory reasons. But our hope is that our on-chain L1 is plugged into sort of every chain, every retail chain there is, so that people can essentially go with confidence and trade with our contracts there, so that they don't really have to, do other liquidity pools and things along those lines in the same way. Uh,
mhm,
because the the hope here is to really create a system where all the chains are compatible with our order book, so that there is no fragmentation of liquidity. And that's the way that everyone wins. Is That's the more efficient market. That's the 24/7 trading. That's, all these kinds of things get fractionalization. All of these things get much more supportive for all the different tickers if the liquidity is bridged across all the different chains.
so that kind of leads me into my next question. How do you deal with like timing games across the chains and between the, your L1 and the clearinghouse and all that stuff? Because it's for sure, in any exchange system, there's always actors that are trying to, be toxic and make money.
Well, so keep in mind, and this is why we built it this way. The on-chain L1 is permissioned, right?
Hmm.
Our L1 is permissioned. So you can't necessarily game the systems in that way, because like the bridge layer is not an open bridge, or anything along those lines. Um, I think if they do go and take it to Uniswap or something like that, which again, theoretically they can do, even though they will lose voting rights and dividends and things like that, there is no guarantees, that we can protect people that way. But
Hmm.
here, with our L1, we have systems that essentially check and make sure that the settlement works well, even if it's across chain like mainnet and Arbitrum or something along those lines. All the assets will get held until essentially the slowest, clearing elements get cleared.
I guess my question is like, you have Ethereum Arbitrum or something, and an a sell order gets posted on Arbitrum, and you have basically this sophisticated market maker that's trading on your system that you want to basically come in and take the other side of that order when the price is right. Um, I guess just how do you ensure that, you know, the user that's making that sell order is getting like a good price and stuff like that.
Yeah, I mean, look, if you're trading on mainnet, so from the perspective of the order book, the price gets set when the order gets matched. And then if it takes 20 minutes to, completely clear on mainnet type of thing, that's unfortunately the risk that the counterparty is taking if they're coming from mainnet, right? We
Hmm.
we do want to enable that for people. We're generally not going to front, shares or money in that fashion, for the 20 minutes. I think that's something that you just have to be mindful of if you're executing on the mainnet. But again, the price gets set the moment there are trades that match on our order book. And our order book virtualizes liquidity on all the different chains. So theoretically, it's not chain dependent in terms of the matching of the order. It's only the execution of the order and the settlement that will get delayed.
So maybe going into that a bit more, the virtualization of liquidity and how that works across the different chains.
So we basically, um,
Maybe on a fresh slide or something.
yeah, I'm just trying to think about how best to depict this. So in each of the, let's say this is Arbitrum base, and then this is our L1. So when let's say in the L1 wallet here, we have, I don't know, 3 apples. And in the L1 wallet on Arbitrum, you have like 5 apples that is in our clearinghouse at that moment. Then what happens is on our L1, we essentially have like ARB apples and base apples that are all apples. So we have 5 of those and 3 of those. These are tokens on our L1 that, don't have any values on their own right. But it allows us to essentially keep track and match it on L1. So effectively, when it goes into order matching, here, the L1 system knows that we have 8 apples available to sort of counter match. And then the settlement back to the own chains and things like that happens after the fact. But the order match can happen instantaneously with 8 apples here.
Okay.
And this is
So
all
there,
done with native tokens on our L1 that are just minted at the same time as the tokens to Arbitrum and Base are minted.
okay. And so there could be basically 2 orders, one to sell 5 Apple shares and one to sell 3 Apple shares, and another order could come in that takes all 8 basically.
Yeah, so then let's say then from I don't know, Solana, there comes into the L1 an 8 buy Apple. Then you have the sell, so 8 sells here. You have the 8 buy here. That gets matched. And then the settlement happens.
Which basically requires a transaction on each chain.
Yep. So then you have the Solana gets Apple, the 5 apples from ARB and 3 apples, as well as the ARB apple and base apple on our L1 all get burned, right? And then you have Solana apple that gets minted, 8 of them. And then the stablecoin, whatever that is, gets bridged and returned to the respective owners on ARB and base.
And so you're going to pay a gas fee for all this. How does that play into this?
So we take a transaction fee. The transaction fee essentially covers for the gas.
Okay, but your system will kind of route and take into account like what's the best place to buy from given the gas. Because like if one of the sell orders from Ethereum is going to cost you $10 basically to.
Well, so again, this is sort of a high level depiction of this. Sometimes we may just leave the tokens on chain on that wallet, and just lock it, right? Take it out of circulation, if you will, so that nothing actually has to get bridged over.
Okay, saving on some of the gas costs.
Yeah. So there are those kinds of efficiencies that we've sort of built into it, so that we don't have to, deal with those kinds of losses.
And so then if someone comes and wants to, market make, and they already have, like, let's say, a bunch of shares of Apple, with their own clearinghouse or whatever, can they come to you guys and say, here are my shares, can I get some Apple.t?
Yes, very soon.
Soon. Okay, so that's another, along with tokenized options, borrowing, lending, that would just be like minting, basically.
Yeah. So sort of bring your
Creation.
bring your traditional shares to us, and you know you can keep them with our brokerage, and then you can tokenize them and do fun things with them.
Hmm.
That's something that is definitely on our roadmap to support.
Hmm.
There's a lot of regulatory
Complications.
things that yeah you have to get right there. I mean, least of which is you need to be a broker dealer that actually gets cleared by FINRA and SEC to be able to handle those kinds of shares.
And then, is there any interesting way that ETFs planned all this, or is that also in the future roadmap?
We already support ETFs, and anything that's available on the traditional markets, we can make available on our system.
Mhm. Were there any of those future developments that you'd like to describe, like between the tokenized options, borrowing, lending, or creation redemption, um,
No, I'm gonna
or
get
is
in
it
trouble.
still TBD?
I'm gonna get in trouble if I do that, because regulators don't like you talking about things before they sign off on it. So
Makes sense.
yeah.
Um, is there anything else that you'd like to get into?
No, I mean, I think that's sort of the high level of how everything works here at Denari. Of course, as these new things come out, would really look forward to sort of explaining that to people as well. But again,
Mm.
there's just limited things that I can say about things, about some of these systems before the regulatory signs off. So
Actually, one interesting thing that you could maybe describe a little bit is, you know, the interface to Dinari is not often Dinari. It's often through other applications and other companies, right? So how does that work at a high level?
yeah, no, thanks for asking. That's good. So early on, we found out that while there are some users that want to interact directly with our contracts with their wallet, so that scenario would be you bring a wallet, the wallet interacts with the smart contract, which I guess would be the Dinari website is the easiest way to do it, but you could do it direct as well. And then we're dealing with the clearinghouse on the back end. So this is sort of how I assume we were doing it up to this point. However, most of our volume doesn't come through sort of direct wallet engagement. Rather, what Denari has done is created Denari SDK, which is essentially kind of our brokerage services in a box. So if you are App X, whatever you're building the latest super app or you're a money transmitter already or whatever it is, and you want to offer to your users the ability to buy and sell US shares. What you would do is the AppX would integrate directly into our SDK, and literally from a few calls, you'll be able to mint your users these token stocks. Now, the way this works is in a couple of different ways. There's kind of the Web3 apps that can provide their own user wallets. And the tokens essentially get minted directly to the user wallet. Some apps use kind of an app level omnibus wallet, and then they do the ledgering themselves, and we're just delivering the shares to the omnibus wallet. Or they can use sort of they're a Web2 app, and they don't want to mess around with wallets or something like that. In which case, there's kind of a managed wallet solution that Dinari provides, and then we can mint the US shares into the managed wallet. In any of these situations, though, you're basically engaging with the UI of the app X. So you're not really seeing anything about Dinari there. Now the same, same thing, all the compliance stuff with the clearinghouse and things like that still happens. That's managed by the Dinari and the SDK. But from an app X perspective, whatever it is, the users can just engage with the app X. They might not even have to, worry or know about wallets or tokenization or anything along those lines. So that would be the managed wallet solution. Or they could be more Web3 savvy and they either is an app that's a wallet app, or at the app level they have an omnibus wallet, and they can provide users exposure to these shares that way.
Hmm. Interesting. So the app has to deal with basically taking in fiat or crypto or something, and then under the hood, basically supplying it to Denari to get in exchange the tokenized.
So most of our customers that are our business partners, they're already dealing with stable coins in some way, shape, or form. So like either they're a money
Hmm.
transmitter, they're a neobank, they are a crypto exchange, they're a crypto wallet, whatever it is. It's usually transacted in stable coin. So that's the benefit of working with the Dinari SDK is you can come and buy shares, tokenized shares with um, stable coin directly.
Hmm. Super interesting. Um, so this is like the main way in which users will interact with Denari. They don't even know that it's happening under the hood.
So there are many apps that offer tokenized stocks now that's all powered by Dinari, and they probably don't even know it. So this accounts for about 95% of our traffic.
95% of your traffic. And then, obviously there's MBBO and everything. Does your exchange at this point contribute to MBBO, or is that a future thing?
Um, the MBBO has to be true until the market closes, in which case it's kind of like a dark pool, so the prices may diverge.
Okay. So it's not an exchange in the traditional sense where it contributes to MBBO. Not or not yet, I guess, or something. Okay. Well, it defaults to kind of an MBBO mid or something. Um, and then how do you think about fees? So what's the fee structure for Denari?
The fee structure right now is uh, anywhere from 5 to 25 basis points of
Hmm.
the
And
of
is
the
it
loan.
maker taker or
It depends on
inverse or
it
both?
depends on the chain. It depends, it depends on a lot of things. We're not trying to make a ton of money. We're just trying to cover our costs, right? So
Mhm.
if it's like Ethereum mainnet, it's going to be a higher price than if it's Arbitrum.
Okay, so it's not just a fixed bit fee structure. It could be like fixed plus because of the gas fees and so on, which actually mirrors US stock fees because there are like three components to the fee, right? So, um, super interesting. Um, awesome. Do you have any concluding thoughts about Denari? Like what other things you're excited about? Like what you view as the future?
I mean,
Um,
I think everyone sees tokenized stocks, especially U.S. stocks, as one of the biggest opportunities for bringing liquidity on chain. However, it's not really the end game, right? The end game is tokenized stocks trading next to tokenized bonds, trading next to tokenized debt, and having a clearinghouse that's able to handle all these different things. So to me, the the goal here is let's be the compliant engine that can settle all these things. And then the tokenized stock is probably going to, because this is the case in traditional fintech, traditional stocks is going to be the biggest market there, and tokenized stocks is going to be the biggest market on chain. But the goal is to have all of these different asset classes be interoperable and people can essentially manage their wealth on a single platform, moving in and out of everything, right? That's
mhm.
that's to me the end goal, and that's key.
Awesome. Well, thank you so much for joining me, Gabe. It was great.
Thanks so much for having me.